Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report with Alpari. So let's start. It's the first daily analytical report this week. So I will show you some interesting setups for the forthcoming four trading days. Unfortunately, again, from the fundamental point of view, we don't have anything significant today. As you can see, it's just the speech from Theresa May. Apart from that, the calendar is rather empty, and we definitely should not look for attractions in the macro calendar. The thing is that when the calendar is empty, in my opinion, it's usually better. And I can see it now that the market moves more technically, and I'm enjoying that because I'm a technical trader. And in my opinion, it's much better for trading because those fundamental events, are at some point, at large point, I would say, unpredictable. And well, part of the trader's job is to try to predict the future, movements, and if the technical analysis is broken, is destroyed sometimes by fundamentals, from my point of view, it's not very good. And when the calendar is empty, almost empty, or we don't have any significant news, it is much better, at least for myself. And on webinars with Alpari, I'm trying to teach you the technical analysis because I strongly believe, and I know because I see results on my live account, I know that it works, and I want to share my knowledge with you. But coming back to fundamentals, as you can see today, we don't have any attractions apart from the speech from Brainard and from Kashkari, both Fed members. And traders will be looking there for clues about the interest rate rises in United States. Tomorrow will be definitely more interesting because we'll have a speech from Janet Yellen, but also we'll have important data for Canadian dollar. So American dollar to Canadian dollar will be strongly influenced. Tomorrow we should expect a higher volatility on this instrument tomorrow. But as for today, as you can see, the calendar is not busy. Again, that is why movements are more technical, and I'm enjoying that. And I will show you some good trading occasions. First, we'll start with dollar index. Which hit the local top on 5th of July. And at the end of the last week had a strong drop, but as you can see, they are now going slightly higher, but it does not look like a reversal. This looks more like a correction pattern. Here and here it's a wedge. Maybe let me change this line not to confuse. Okay, let's go like that. So we do have a wedge with those red lines, the same as here. Here we had wedge with black lines, and that kind of formation indicates that there should be a trend continuation, as here. Downtrend, wedge, downtrend. Wedge, and the most probable scenario here is a downtrend as well, according to the technical formation and according to the price patterns. Downtrend here, downswing, and breakout of this line is more probable, so American dollar should get weaker in the next, maybe not today, maybe not tomorrow, but in the next. Now, very interesting instrument, which is a cable, British pound to American dollar. We created a written analysis yesterday, I think for FX trade, where I marked the possibility of a reversal just here. And as you can see, it happened yesterday. Let me show you why I created this rectangle. Well, you know why, because you saw this rectangle on Friday. So it's not a surprise for you, but for those who don't remember or want to see again how the analysis was created, I can tell you now. So what we had here is an uptrend, upswing correction, this correction is a wedge. Oh, this one was a wedge as well, an upswing and a flag is also a trend continuation pattern. So we bounced off the lower line of the flag here. Also there was an, if we use shadows, it will be here. We used the upper line of the wedge here, lower line of the wedge, upper line of the wedge, and also there was 38.2 Fibonacci level retracement of this upswing. And all those three supports came in one place, as you can see here. Okay. And price touched that level and went significantly higher, 70 pips higher. Also what we had here was that's an inverse head and shoulder formation, left shoulder, head and the right shoulder. Today we broke the neckline of this inverse head and shoulder formation, which in theory activates the buy signal, but buy signal was created here with an upswing here, but this is a midterm buy signal backed by those factors that I mentioned before. So it looks alright, it's legitimate. And according to the technical analysis, the price should follow. Next occasion may be a little bit surprising for you. There's no clear signal yet, but there may be. Why is that? On the daily chart, what we can see here is a defense of a long-term horizontal support, right? 2016, June, August, November. From the last year, 3 months last year, that level was defended. So we touched that again. We touched that with a second bottom, because here is the first one, here is the third one. Here's the first one, here's the second one, or actually it's a triple bottom formation. First, second, third. Anyway, we touched this level, and as you can see, the reaction followed, the bullish reaction followed. We got a bullish sentiment here. We can see that many traders abandoned short positions and they started to buy, and many traders which were without a position were buying here. This double bottom formation or triple bottom formation, does not matter, comes with a divergence on MACD, right? So here you have a low, MACD is lower, here you have a lower low, MACD is not having lower low but a higher low, so that's a divergence. Is there a signal? Not yet. There is no signal yet. Why is that? Because every head and shoulder formation or even double bottom formation, in my opinion, well, it depends how do you treat it, but in my opinion every formation has a neckline, even double bottom or double top formation, and breakout of this neckline, which is usually like short-term or mid-term trend line, in this case it's a downtrend line, it has to be broken first. And if it will be broken, once it will be broken, you will have a trading signal here. So far there is a positive sentiment, there is an idea for trading, but there is no signal yet. Signal will be created once the price will break this blue line. So far we do not have that, so we are waiting. And you know that patience is a virtue of a trader, so we're just patiently waiting. For the last week, I don't think I had a position in the last week. I cannot remember. It's not a big deal for me, right? I bet on quality, not quantity. It's not a shame for me not to have a position open, right? I'm waiting for a proper trading signal, which will suit my trading strategy, my trading system. So far, I don't have any, and it's not a problem for me to wait a few more days for a proper trading signal. Like here, there is an option, but there is no trading signal yet. Another instrument which I was talking about on a trading sniper is Australian dollar to American dollar. You remember this very strong resistance which was used recently at the end of June for a bounce. The price had a resistance here and here and here. After the breakout, many suspected that this will be used as a support, but it did not work out. Price broke the support, went lower, and used this recent support as and a recent resistance as a resistance again. Once, twice, and we can see that we're using that for the third time. On hourly chart, it looks promising. It looks even better on a daily chart, but keep in mind that it's just 3 o'clock Moscow time, 2 o'clock Central European time. So we still have a lot of time for the market to close and for the situation to change, especially that it's not a pair from Europe, it's Australian dollar to American dollar. But if the day will finish like that, something like that, with a shooting star, it doesn't matter if there will be a black body, so bearish body, or a bullish body, or a smaller or bigger one. What counts is the reaction on the resistance, which was very negative, and the price bounced out this resistance. But again, there is no trading signal yet. I think the trading signal will be created once we'll break this line, which connects lows from Friday and from Monday. Once the price will break this support, the reaction should follow and the movement should follow, and the price should get there. So what we're looking here for is like 30 pips downswing, well, which is not a tremendous amount of pips, but still fine, especially for short-term traders. As we look really in the short term, I'm looking at hourly chart. I'm not doing that very often, but in the same time, when I see an interesting occasion, why shouldn't I go there with a greater detail? American dollar to Mexican peso, I like it because it's going as expected. Why is that? You remember this blue resistance, which for a long time was important support. After the breakout became resistance in June and became resistance at the beginning of July. What we got here were two daily candles with long tails, with long heads, indicating that price tried to break that resistance, but they couldn't do that. So the price reversed, created 3 bearish days in a row. Now we are experiencing a correction, but signal is clear. This resistance got rejected, and the sentiment here is negative, as it is from almost the beginning of the year, from the end of January. Euro to American dollar is now, just now as we speak, creating a buy signal. Why is that? Because we do have an uptrend. We do have a trend continuation pattern, which is flag, those pink lines. We got a breakout of the upper line of the flag, along with creation of inverse head and shoulder formation, which ends this downswing. We had a head and shoulder formation here, which ended with inverse head and shoulder here. So here we had a strong buy signal. And now the price was creating a descending triangle, which actually is a continuation pattern, but is a bearish continuation pattern if it started with a downswing. So if the price got down and met the resistance and there is a descending triangle, it indicates that support will be broken. But when descending triangle is present in a situation like that, I would say it's, let's call it a pennant here, not a descending triangle. And pennant in this case, when it happens, when a kind of descending triangle happens after an upswing, it's more a trend continuation pattern. And as you can see now, we are trying to break the local resistance with a nice upswing here with this nice candle. We are having daily highs as we speak, and a breakout of this resistance should trigger a strong buy signal, and we should aim local horizontal resistance, and the aim is to beat those and make new long-term highs. The aim is to go to the highest levels since May 2016, and buyers are on a good way to do that. Gold is very interesting because yesterday, 2 days ago, on Friday, we broke this horizontal support, which actually should wipe out the demand from the earth. But yesterday, we got a reversal. Well, just one candle. Sellers obviously will say it's a dead cat bounce. I will say it looks nice. But the problem is that it's not happening on an important support. It just happened, right? It's like a correction movement. It's not a reversal pattern. It will be a reversal pattern once the price will come back above this resistance. But as you can see, they cannot do that. So far they are below. So for me, it's not a reversal pattern yet. If we break this pattern into hourly chart, what you probably noticed is an inverse head and shoulder formation, left shoulder, head and right shoulder. But again, without a breakout of a neckline, we have nothing. With a breakout of a neckline and a comeback above this resistance, the buy signal will be created. If the price is not there, the buy signal is not there either. Let me change the color like that, dark green. If the price is not on this checkpoint, the buy signal is not here as well. If the price will get there, we will be able to talk and think about a potential reversal. So far, no. Silver. I marked this flash crash, which we had on Friday, and here the situation is similar. They are trying to come above important horizontal resistance. As soon as the price is below this important horizontal resistance, there is no buy signal here whatsoever. So sellers can be happy as long as they stay below. Once we will come back, there is a possibility for a bullish breakout. American dollar to Polish zloty. There is a horizontal support which holds since the end of May. I'm wondering when this will be broken, but they're trying, and if the price does not want to go down, probably will go up. I don't see any bullish price action here so far, so I wouldn't be I would not state that we'll have definitely a reversal here, but this 370 looks decent, looks like a decent support. Not so decent for me to open long position and place a short stop loss here. It does not look so strong, but it looks alright. American dollar to Japanese yen, look at that. Mostly bullish candles here. Higher and higher and higher. Bank of Japan is probably very happy with that. With the weaker yen, they don't want a strong yen. There is a support. There is another support here. There is another support here. As long as we stay above the orange area, the sentiment is definitely positive. That one, I would say, would be the strongest one. Euro to British pound. Here I'm seeing ascending triangle. Ascending triangle in an uptrend. Ascending triangle in an uptrend after breaking the long-term downtrend line. There is obviously an uptrend here. So I'm seeing a trend continuation pattern in an uptrend. So what it means is I'm expecting from that the price will break this horizontal resistance and go higher. That creates an opportunity for a pending order here. I'm not a fan of pending orders. I would rather wait to see a reaction because I would not like to get caught in the false breakout. But I will closely look at this position in the next few days because if I will see a bullish breakout here, I will not hesitate to open a long position. Euro to Japanese yen, also you can see, well, Euro has a positive sentiment, Japanese yen has a negative sentiment, so no surprise there that we're skyrocketing here. Well, I don't want to brag about that, but here from this candle, from this bullish engulfing overlap on this horizontal support, we were telling about the positive sentiment, and we're having a 700 pips from that since then. So yes, that was a good one. I think I have to tweet about that. Australian dollar to Japanese yen, we just made an attempt to break resistance, long-term resistance. First attempt is not very successful. Well, I wouldn't say that it's a nice breakout because the comeback is really fast. But as long as we're gonna stay above the red line, that has chances. That has high chances for success. New Zealand dollar to Japanese yen. After a few weeks of constant upswing, we do have a small reversal here, which is not happening in a random place because we do have a horizontal resistance here, right? Which is a neckline of this left shoulder, head, and the right shoulder. So inverse head and shoulder pattern. So bounce here is not totally a surprise. British pound to Japanese yen. As British pound is stronger and Japanese yen is weaker, it's not a surprise here as well that we are heading higher. We are heading to the horizontal resistance. Most probably it will be hard to break it straight away, but who knows. The sentiment is definitely positive. I'm not a big fan of entering with a long position after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days, almost bullish days in a row, right? We had one bearish day here. Or two. I'm not a big fan of entering setups like that. I would like to wait for a correction and enter on a support rather than entering on a resistance. Well, in general, entering with a long position below the resistance is not the smartest idea ever, and try not to do that. It's just about the risk to reward ratio. It has to be good, and if in a long position to have good risk to reward ratio, you need to enter as close to the support to have a tight stop loss below the support and aim higher. Simple as that. American dollar to Canadian dollar is doing really good. As expected, the price downswing wedge, downswing flag, downswing failed defense of the horizontal support, downswing. Well, the sentiment is not very good. Here, American dollar is weak, Canadian dollar is stronger. I can't imagine what would happen if we would have higher oil prices, because Canadian dollar is kind of oil dependent. It's a commodity currency. So if the oil would be stronger, higher, Canadian dollar would be much stronger as well. Australian dollar to Canadian dollar, here we also wrote an analysis because we do have a head and shoulder pattern, breakout of a neckline. Neckline is this green horizontal support. Breakout of a neckline, increase the bearish momentum, which allowed to break the long-term uptrend line here, connecting lows from May 2016. And even with this upswing here, it does bearish situation does not change, because that would be just a normal comeback to test the recent support as a closest resistance, right? This trend line was the support, it got broken, so it will be a resistance now. As long as we stay below the neckline, the sentiment is definitely negative. Right? Not even the trend line, I would say below the neckline. As long as we stay below here, I can make it lower, I guess, to adjust it to the more recent swings. So yeah, as long as we stay below here, sentiment is negative. And now, last but not least, let me show you oil and indexes. This is oil.